it's interesting if you start looking up specific topics on bullish strategies and so forth, or option strategies. You see all these videos of all these YouTube creators, and you look at the date, and they all stop a year ago, or 2 years ago, or 18 months ago, and you don't see any more videos from these people.
It's good to have you guys. Super exciting day as we start today. CPI. Look at this. We totally surprised the market with much hotter numbers all across the board. Let's just start with that action. And just Chris, you tell me what you think. I'd like to know your read on what's going on and whether you think this is a peak value or this is a sort of a nightmare of things to come for us as far as higher prices.
I mean, a nightmare depending on your perception, really. It depends on your perspective.
Sorry. Go ahead. I'm sorry. I'll be right back.
That's okay.
That's funny.
Okay, it gives me a chance to clean up my chart a little bit here.
Is that on the street, or was that in his house?
Sorry guys, that was the Pomeranian going nuts. So I had to calm him down. Okay, let's talk about CPI. You were saying to me that nightmare from depending on what point of view you have, but like what are we looking here? Looking at the dollar index.
Yeah, so I've got the dollar index up in front of me, and if you just go up to the daily time frame, I mean the dollar has been a bit of a runaway train for quite some time now, right? I mean, we had this long-term consolidation range, and if you recall, Boris, when I first started coming on to the trading battle, we were somewhere kind of down here, and I said I'm bullish on the dollar all the way up to 99 and beyond, and I cited this consolidation range. But since the consolidation range has kind of gone right out the window because resistance is a thing of the past. I mean, this thing just keeps going and going and going. And of course, what I always say is this is directly related to what we're seeing on the stock market. So if I just pull up the Dow, I've been anticipating a sell-off on the Dow for some time. You can see from a technical perspective, we do have an up capital Fibonacci boundary here, but based on my approach to the market, I call this a super shallow one-toe retracement. Basically, what it means is that we've only come back to this 23.6%, and the market likes to come back a little bit deeper than that. So even if it leaves the Fibonacci boundary, it has a tendency to come back to try to get at least that 38.2%. So as far as the Dow is concerned, I'm very bearish on this all the way back.
What does that take us on a 38 retrace?
About 25,000. 25, okay. Yeah.
Okay. Can I ask you a question? I remember you telling us beforehand, but can you refresh our memory? The red arrows, blue arrows, what are those things on the chart?
So that's just the fractal indicator. So all that's doing is pointing out my official highs and official lows for me.
That you mean that's official highs, official lows against what relative measure? Like what is that?
So basically, the way we're defining an official high and low is just a center wick that has two candles to the left and two candles to the right that are either higher or lower, right?
I see. So it's the highest high or the lowest low within two candles either side of the trade. Why such a range structure? Like why a 5 candle range structure?
That's just the way I've always traded. Based on I love a break of those highs and lows. Because since the market moves in waves, the idea behind it is every time we touch one of these highs or lows, the thinking is that we should see a pullback and then a continued sell-off, right? In this case, a sell-off, right? And I mean, you can see it play out again and again and again. I mean, there's one example right there. There's another example right there. There's a third. There's a fourth. So I'm looking for the fifth example of this right in here.
How many examples does it go before it exhausts itself usually?
I mean, it depends. It depends. So what we're looking at right here, in terms of this down move, these are my sub fibs. So I have my capital Fibonacci's are pointing bullish. So I suppose that's the good news for long term, right? But the subs are down, and going off of this all-time high, you have sort of 1, 2. We're only in the second wave of this. So I actually anticipate a move down to 25 over the coming months before we start to see any sort of meaningful rally again, return to the Dow.
Okay.
Cool. And you can see the same thing across the board. I mean, if I show you S&P real quick, it looks very, very similar to the Dow. There we go. Looks very similar to the Dow. You can see it came up, approached the trend line, gave me an evening star, fell. It's tested the evening star, but as we speak currently, it looks as though that evening star is going to hold, and you can see my outline there of what I'm expecting.
Interesting. If it breaks the high of the evening star, does that invalidate your analysis?
It does, absolutely. Yeah. So if it comes up, so when I say breaks the high, I would like ideally for it to break and close above the high. So just simply touching the high.
Yeah. Not just touch the high, but break the high.
You got it.
Agree.
Yeah.
Agree. Classic. Classic technical analysis. Okay, Scott, how about you? What do you reckon on these numbers? What do you see technically? Can you share your charts with us? Chris has got very pretty little annotated charts. He's clearly got problems with OCD at this point, but but we appreciate his perfectionism. What about you, Scott?
Well, a couple things fascinate me right off the top. And that, first of all, is a lot of people really still haven't gone through a bear market. I think that's been a kind of a macro theme the entire year. I love going back. I'm a sucker for trading videos and trading books. I mean, I still like to listen to what people have to say. But it's interesting if you start looking up specific topics on bullish strategies and so forth, or option strategies. You see all these videos of all these YouTube creators, and you look at the date and they all stop a year ago or 2 years ago or 18 months ago. And you don't see any more videos from these people. And it's like, part of me is like,
that's funny.
I feel a little pessimistic and snarky at one, and then I kind of feel sad because, holy smokes, they started a strategy and thought they were making a YouTube channel, and all of a sudden things obviously have gone badly because it's video, and then nothing for a year. So I'm fascinated by that we had millions and millions of traders, a bunch of new people to the game in 2020 and 2021, and all of a sudden now it's like, what's going on? So I'm fascinated by that and this whole bear market. It feels like when I watch these, again, in a macro picture, it feels like the bulls are just begging, like, it's over now, right? It's over now, right? Okay, now it's over. Now we can go back to, making YouTube videos and so forth. And, I think Chris feels the same.
I think that's more like the crypto people. I think that the crypto people are the real beggars.
The crypto crowd is definitely silent.
I think the stock crowd is kind of much more diverse.
Right.
But yeah, I do. I do hear you that yes, bear markets. I think what somebody said. I was listening to a podcast. Somebody who's a big vol trader said that what nobody is really ready for is the second leg. And that's exactly what Chris was talking about, because the true bear markets have a second leg. The second leg is the one that destroys everybody, because the first leg, you kind of have the recovery, everybody feels good, and then you just destroy. And then once that capital is destroyed, it takes a long time to rebuild it. It takes about 7 years, I believe, to rebuild it. And that very well could be the trade. We'll have to see. You're right.
And that coincides exactly. I agree with the second leg, because it's the first one's like, okay, I can handle a bear market. I'm in it for the long term. Look at the chart since 1926, and then the second leg hits, and it's like, I get. But my favorite stat, the famous truism, is if you're looking at market history, is going back to the Great Crash, Great Depression, 1930. In the middle of the worst crash, I mean, you look at that chart; it's brutal. It's worse than 2008, whatever. But in the middle of that worst crash, there were 4 straight bullish months in the middle of that. 4 straight, not weeks, not days. So it's crazy that even then, the 20s came with all 90% margin, and people were going crazy. Every household traded stocks. In the middle of the worst crash, there's still 4 straight months up. So there's always going to be. It's hard to believe when you look at the macro, and it's like it's got to be bearish, but bullishness can still survive a little bit. I think that's what we saw on Friday. I think that's what we saw yesterday. And I think it's what we saw pre-market today until about 8:30 a.m. Eastern.
Yeah.
And now I think we're in for just a very bad surprise. I am switching over to my charts. Can you see my charts? Or
Not yet,
okay.
but let's see now. They're coming up. Okay. So
Are they?
yep. Now we see your charts.
I really love weekly charts when I'm dealing with stocks. I like different charts for Forex and other things. But weekly charts kind of keep you calm. You can see this is when people are making YouTube videos.
Yes.
Everything is wonderful. This is not as wonderful. And you can see these moving averages that they're all looking like they're hanging out together in a very small room. And if we make that bigger, oh, look, it's over, right? Three straight weeks. It's over. And now it looks like we break below these lows. I mean, we could hit these lows. That's that second leg, Boris, you talked about, or maybe even farther. So I'm not particularly bullish. This didn't really fool me. Again, I'll trade the charts. I don't put my opinion in my trading, but this feels fake to me. It really does. It feels like we're in trouble.
What feels fake to you? The up move? The
bullishness. Yeah. The bullishness of the past 72 hours did not feel legitimate to me. It made me very skeptical, so to speak.
I think, listen, I think people overread too much stuff into price. Price action is just literally what people are thinking in the last 24 hours. That's
really everything, Boris. That's everything.
What?
That's everything.
But what I mean is what I mean is there's no mystery to it. It's not like a lot of people always say, oh, look, they manipulated the market up because they knew the data was going to be horrible, and now they flushed the market down, and everybody was a sucker for it. No, conventional, all common wisdom indicators actually pointed to a significant decline in used car sales. Housing was down, gasoline was down. What people just didn't appreciate was, I guess, the absolute. Oh, hang on a second. Sorry, I'm killing all my indicators here. What people didn't appreciate was the fact that there is a massive lag in pricing for all of the basic foodstuffs, right? I mean, it's just like all of the foodstuffs had just really blown up right now as an indicator. And I think, to me, the more interesting question, I mean, if you're sort of fundamentally oriented, is given the fact that energy has stabilized, given the fact that wages have kind of stabilized, and that the fact that even Ukraine is able to export wheat. That basically, when you look at the whole commodity futures complex, forget the consumer price index complex. If you look at the commodity futures complex, if you're using that as a forward indicator of inflationary pressures, I think there's a lot to be said that we may be peaking, and that this is actually the bear's last hurrah in some ways. So we have to we'll have to see, but it's pretty unsustainable to have these kind of inflationary pressures for quite a long time. It's also, of course, everything is very geopolitically oriented right now, right? It's all really depends on just how badly Russia can squeeze Europe, just how badly Ukraine can squeeze Russia. And those are factors. I think the thing that's interesting about these markets that people don't appreciate is that they're not economic markets, they're political ones. Political markets don't have any economic markets have supply demand reasons. Political markets have basically power reasons. When you're dealing with power, nothing rational ever happens, which is why markets have such a hard time pricing political risk, because it's the most intelligent thing for Russia right now would be to withdraw and recover, which is of course the exact opposite of what a political decision would be, and therefore pain becomes much greater, and then markets are just completely incapable of pricing in non-rational decisions. So I think that's why there's so much cloudiness going on in the space.